All right, let's do a video. Oh my gosh, am I really doing 2 videos in 1 week? Somebody call the press. Last night on the Discord server was the night before. I can't remember because one day just flown into another in my life right now, being crazy busy. But I said on the Discord server to my members, as I'm going to put this video out for everybody, I said to them, get ready. There's going to be a big decline. And I did put that video out to the public as well, and I said, I really think you should liquidate all equities, meaning stock. Don't hold any stock. And the monthly chart, if you didn't watch that video, I'll put a link in the description. Go watch it. But I basically just showed mostly the monthly chart and said, hey, I think the stock market's in a heap of trouble, and it would be really good to get into cash only and. Okay, so I think it was the next day or whatever, I decided to take a close look at this, and I said to my members on the Discord server, I said, hey, I think I'm even thinking about taking a short position or two on the S&P futures, S&P 500 futures. Now, these are not options contracts, these are futures contracts. So just so you know, we're looking at this right here. This is the MES. We're on the TD Ameritrade platform here called Thinkorswim, or otherwise known as TOS. So for those that don't trade futures, this is different than options. Futures and commodities are very similar. So you probably heard of crude oil and corn and, natural gas and whatever. There's all kinds of different commodities around the world, right? So, but futures, in this case, for the S&P 500, are basically a product that you can trade against the S&P 500 index, okay? But the great thing about futures is, of course, you can trade long or short. All right, now I decided to take a short position. I was thinking about taking two. I haven't been doing a lot of trading because I've been so busy with my job. I'm doing a lot of software development right now for an oil company here in the great state of Texas. So I am super busy working mega hours. As you all know, oil's been up over $100 and stayed up over $100 for an extended period of time. So business is absolutely hopping here in Texas in the oil industry. The company I work for doesn't just operate out of Texas, but I won't dive into that because I can't. A lot of that's very hush-hush, and I can't really talk too much about it because that kind of natural resource is very well... It's secretive for a reason. It has to be protected and all that kind of stuff. So I can't dive in too deep about it, but yeah, we've been really busy. So anyway, you can see over here to the right, I took one contract on the eMicro S&P 500 futures. These are the June 2022 contracts. I did say I thought it was a good time to go to cash unless you were trading futures or commodities. So of course, what did I do? Promptly traded a futures product. And well, that's going straight down, guys. What a big day here. 83.25.5, almost 2% down today, 1.9%. Okay. You can see here that I took this position short at 4385, and we are currently at 430750. Now this is an eMicro, so I think TD Ameritrade has an initial margin requirement of about $1,500, somewhere around there, for one of these contracts. So you've got to have $1,500, available either in assets or cash, or assets just means positions that can be leveraged, basically. Because some positions can't, some are not marginable. So you can trade against, I'm trading against margin right now because obviously to trade futures you need a margin account. But what I really mean is, as you see here, my profits are going up and down based on the price as it's moving up and down. Very active day. Fridays, of course, always active. But the S&P 500 futures are always going to be active, especially intraday. But you can trade them basically 23 hours a day, 5 days a week. So that's another big, huge benefit to futures and commodities. You can trade them much more frequently because they're trading, like I said, 23 hours a day. But not on weekends. So anyway, just looking at this, is the price is going down here, and I think it's going to continue to go down all the way through, I think this is May. See what we got here, guys and gals. Can't remember, is the 3rd. kind of hopping around. Yeah, May 3rd, okay? So this is May 3, this cycle low right here on the daily chart. We're looking at the daily chart right here. That's May 3, right in there. Today is April 22nd. Now you've got trading days that are happening on this chart, right? Not calendar days. So just be aware that each of these candlesticks is a trading day. So any holidays or weekends are going to be, not on this chart. So you got to keep that in mind as, the time moves fast, right? Because it skips some days and whatever and whatnot. So that's it. May 3rd, I think, is going to be the low point, somewhere right around there. So some of you may ask, other than me just being busy, why did I decide to take this trade specifically? So we can see the MACD crossed over here, right? On the daily chart. That is, that's a thing of beauty right there. Got crossover. Okay, plus I had divergence dots. I won't dive too deep into that right now. For those that may be new to my membership, though my membership seems to be declining, but whatever. YouTube and Google, gotta love them. Not. But if you're new, I won't dive too deep into this, but divergence dots just simply says that the logic that I have behind some of these indicators has detected there's a divergence going on within the indicator itself, okay? So those are very helpful. So when I start seeing divergence dots on both the Big Daddy forecast, which is my own unique indicator, and the Stochastic Momentum Index, when I start seeing divergence dots on both of these, I know something's up, particularly when you get a crossover like this on the granddaddy of all indicators, the MACD. Okay, so that's pretty strong evidence right there alone that there could be a short side trade coming up. Okay, recently, about a month, maybe a month and a half, 2 months ago, I put in some logic right here on these dots. And this is basically the beginnings, because I haven't finished this yet, of detecting cycle lows automatically, okay, without having to draw them myself. I don't mind drawing them, it's fine, but there's some logic in here that I'm starting to flush out that I think is going to be able to detect cycle lows. It isn't perfect yet. You can see here it's picked it up, here these dots picked up this cycle low, right? These dots here picked up this cycle low. But there's still some work to be done, like not getting false flags, like those areas are kind of false flags. Okay. You can see there's a cycle low here, so these dots pick that up. Okay. So back to this. So why did I take a trade this time, other than the fact that these indicators are saying it's a good time to trade? Well, because, let me clear the screen. Because we had a really significant group of dots here. This group right here. That's heavy duty, guys. That's probably the longest string of dots I've had, even longer than this one. Okay. That's a very long string of connected dots. So there's really strong evidence that that this thing is moving downward. Okay. There was a little separation there, which normally we would probably say something like there's a good chance this is a cycle low right here. But only a small gap, and the dots started right back up. So that right there, guys, was it for me. That was that day right there. Let's see, what day is this right here? Yeah, this dot right here. Okay. That dot right there and that candlestick right there, that was all I needed to know. That was like almost automatic. Almost automatic. But I haven't traded in a while, and I'm really cautious about trading. I've been just I've just been accumulating corporate bonds, okay? Because there's some opportunities there in corporate bonds. So I haven't been doing a lot of trading here, but this was kind of like a no-brainer. I couldn't resist but take a position. And as you can see, I'm up, $375. So I grabbed that somewhere right up in this area here. I think it was last night. Okay. You can see right there, 43.85 is where I jumped in. All right, so we are at 422. Sure, there could be some bounce up in here. Looks like the 50's still going down. This is 2 big, huge down days. I think we're going to get some, it might come up here. Who knows what it's going to do. I don't think it's going to survive very well. I think it's going to continue down. I don't know how far. This peak right here, this run, did get above this. So that is kind of significant. So we'll have to wait to see what happens here. Does it really take out this low, this one right here, which is at 4,100, more or less? Where's that bottom of that candlestick? Yeah, 4101. So that's way down here. So we'll have to see. It may not get that low, right? It doesn't really matter. I'm not really concerned about particularly. I trade differently than a lot of people. A lot of people they trade on a number. Oh, my exit is 42.50. That's my exit, and I'm not going to budge. Oh no, sir. I don't trade like that. Okay, I might even close this position right now and take the $370, but I probably won't. The reason I say that is because I see the cycle low coming here at 5.3, and that's how I trade mostly. It's not that I won't have a stop loss up in here somewhere to protect myself, sure, but I'm on one contract, and I only took one contract for a reason, to keep the risk really small and make a few bucks and be a happy camper, and not stress out about it. So there you go, guys and gals. That's my video for today. I do think the stock market on the average will continue to go down all the way through the first couple days of May. The MACD says there's more to come. And I don't think this is over. So God bless everybody. Love one another. Forgive one another. Hope you're having a great Friday. Hope everybody has a great weekend. Enjoy the video. Talk to you all real soon again next time.